Good afternoon and welcome to this Yellowstone Advisory webinar with Rotork plc. We're delighted to have the CEO, Kiet Huynh, and Director of Investor Relations, Andrew Carter, with us today. And I'd now like to hand over to Kiet to start today's presentation.
Thank you, Alex. So, good afternoon, everyone. My name is Kiet Huynh. I am the CEO of Rotork, and I've had with me Andrew Carter here today. Thank you very much for joining us, and also thank you to Alex and Yellowstone for hosting this event. So what we'd like to do is to take you through our results for 2022, and then also give you an overview on our Growth Plus strategy. So before diving straight into our results, I thought I would give you some of my reflections in terms of my first year as a CEO. I have been with the company for 5 years now, 4 years prior to becoming CEO, and then CEO in January of last year. Last year was a very busy and exciting year. I really enjoyed taking charge of the company. I really enjoyed visiting our Rotork sites as CEO, spending time with our colleagues, our customers, and our end users post the COVID lockdowns, and then meeting our investors and our analysts for the first time. Touring around our sites around the world really confirmed to me what a first-class engineering company Rotork is. And with the Growth Acceleration Programme giving us a really strong foundation from which to profitably grow. Also, touring the sites, it also demonstrated that our people, who are talented, who are professional and committed, they really demonstrated their qualities last year, especially in the second half, when we really had to step up production to deliver on our full-year results, which I'll touch on in a bit. So, in meeting our customers, their feedback was very consistent. Rotork has a fantastic brand. We have a market-leading position in terms of our electric actuation products. But it's not also due to our products, it's also due to the high level of site service that we can provide our customers is what gives us that market-leading position. However, there is still room to grow. Customers have fed back that they would like to see improved delivery and lead times, and they would like to see this recover, coming off the back of the supply chain issues that so many other companies as well as ours faced during last year. In meeting our investors, it was clear that our return on sales and return on capital, as well as our cash flows and balance sheets, are strong and well understood. However, it's returning to growth is a key imperative moving forward. Hence the launch of our Growth Plus strategy. So therefore, during the summer of last year, I spent a lot of time with the management team revisiting Rotork's vision, our purpose, and what we want to be. And then we developed our Growth Plus strategy, which I'll give you an overview towards the end of this presentation. However, the work strongly confirms the important role that Rotork is set to play in the energy transition, not only in emissions reduction, but also in decarbonisation more broadly, including hydrogen, biofuels, carbon capture and storage, and those markets. So with that, I will go through and point out some key highlights of the results. But before I do, sorry if you can go back, Alex, I just wanted to reiterate our purpose. We're a purpose-driven organisation, and our work means far more than just simply our products and our services. Every day we're helping tackle some of the most important sustainability issues of our time, hence our purpose, keeping the world flowing for future generation, with our values of stronger together, always innovating, and trusted partner. And we're committed to collaborating and supporting one another, to continuous improvement and being a responsible business. So taking you on to the highlights for last year, before Andrew takes you into more detail in terms of the results. So in 2022, we delivered a strong set of results, and as expected, a strong second half performance. Orders grew approximately 7% constant currency year on year, with CPI and oil and gas showing particularly strong growth, whilst water and power had modest growth, reflecting the tougher prior year comps, as well as slower activity in China. Revenues also grew at 8.4% on a constant currency, and margins were resilient at 22.3%. A really good, strong set of results. As always, we had very good return on capital employed at 31%. Cash conversion was 76%, and that really reflected two things. It reflected the phasing of our revenue in the back end of 2021 going through to the start of 2022, but it also reflected an increase in our working capital as we built up more inventory to overcome the logistics supply chain issues. In terms of non-financial performances, we're really pleased to report a 17% reduction in our direct greenhouse gas emissions, and we're delighted to be featured in the highly regarded S&P Global Sustainability Yearbook, being within the top 5% of our global sector. So these for me were the key highlights of 2022, and what I'll do now is hand you over to Andrew to take you through some more of the detail.
Thanks, Gig. I don't plan to go through all of the financial highlights in the detail that our CFO would have gone through, but just to pull a couple of the main points off each of the following slides. As Gig said, the real highlight of the year was the order intake that we saw, up nearly 7% on a constant currency basis on the full year. Orders grew in all of Rotork's divisions, and we saw a particularly encouraging order trend in the final quarter, which obviously sets us up well as we go into 2023. As Gig mentioned, the supply chain impact that we saw earlier on in the year, it reduced as we went through, and we had a much stronger second half than the first half, as we had expected. Margins remained resilient. Our margin in 2022 was just over 22%, slightly lower year on year, reflecting the softer first half, but a strong improvement in the second half. Cash conversion, as Gig said on his highlight slide, was lower than it was last year, but it's really very much a timing issue, with us having had a very strong final quarter and an increase in receivables at the period end. We can just jump to the next slide, please, Alex. So this is our group revenue slide, which talks about revenues by geography and also by division. Revenues for the group overall increased by nearly 13%. As you can see in the charts, all regions and all geographies increased year on year, so a very steady and encouraging performance across all of the geographies and the regions. The revenue did benefit from price. We talked about 2/3 of the sales increase that we saw in 2022 being down to increased price. We put through 2 price increases in 2022 and saw a good benefit from those, and we will see further benefit in 2023. In terms of the geographies, perhaps interesting to note that the Americas was the fastest growing region for Rotork, with the upstream market particularly strong. CPI was the standout in terms of the divisions, seeing very, very strong growth there as well. Just on to the next slide, please, Alex. So this is just a slide that we put up just to really almost bring to the end the growth acceleration program. As Gig said, and we'll talk about again, we launched the Growth Plus program at the start of this year. So the growth acceleration program was a 5-year program that preceded Growth Plus. And I think there's a lot of numbers on here, so I won't go through all of them, but perhaps, you know, the ones to be aware of. Firstly, top left, just looking at the EBIT margin, very encouraging to see a 200 basis point increase in margin over the 5-year period of the program. That came despite revenues not actually increasing over the period. So yeah, a very strong performance, really driven by productivity and cost reduction, etc. I think the other highlight to note on here is the reduction in our footprint. So we talk about 14 manufacturing facilities having been closed over the period. So we reduced from 31 facilities at the start to 16 at the end. The combination of that footprint rationalisation, plus also putting lean savings and productivity savings through the network, enabled us to improve the margin as described before. And I think the programme overall, what was very encouraging was that the £33 million of cash generated over the period comfortably covers the cost of our ERP programme, which has recently gone live successfully here in our Bath factory. So a very successful programme over the 5 years, which sets us up really well for the growth acceleration programme, which Gig will talk about in a moment. Just jump on the next slide, just to say a couple of bits on each of the divisions, starting with oil and gas. I think the message regarding oil and gas is that we saw improving momentum as we went through 2022. This started towards the end of 21, but continued nicely through 22, and it ended the period strongly as well. So I think the outlook for our oil and gas business is reasonably positive. Revenues were up 9% year on year. Important to note that that's despite the loss of our Russia sales. So we stopped shipping products to Russia at the end of February. So we really had very little Russia in total in the year. The Americas region, I think I mentioned before, is probably the most standout in terms of the growth rate. That was very much driven by the North American upstream, which has obviously responded to higher oil and gas prices, plus also the changing demand environment around the world following Russia being no longer in the market. It also saw a pickup in demand for our products being used in methane emissions reduction, which is something that is obviously important from an environmental perspective, but also a really exciting opportunity for Rotork. We just jump to the next one, Alex, just to talk about CPI, which is now our second largest division. CPI saw the strongest growth in sales and orders of the Rotork divisions, with sales being up a very impressive 23.6% year on year. The sales growth was driven, I think, by numbers of things, obviously, but in particular, we've been very successful targeting certain niches in the process industry. So things like semiconductor, data center, auto batteries, those kind of things. And also another target segment for the division was the mining sector. And we've had some really good progress there. The one thing that's noticeable on the financials perhaps is that the margin was slightly lower, which perhaps comes as a surprise given the revenue growth. The explanation of that is down to a couple of things. Part of it is to do with the higher component costs that we obviously saw related to inflation, but it's also to do with higher overhead share. So the way that our accounting works, as a business grows, more of the overhead is allocated to it. And finally, just a couple of words on water and power. Water and power perhaps has a slightly different performance than the two divisions we talked about. But the reason here is very much down to the supply chain impact. So revenues were only modestly higher on a constant currency basis. But what you have to take into account there is that a large part of water and power sales are of electric actuator products. And so water and power saw the biggest challenges relating to semiconductor supply and procurement. What's encouraging, I think, is that if we compare the revenues in the second half to the revenues in the first half, we actually saw a 40% increase in sales. So it really is a story of two halves with a much better second half, which is obviously encouraging as we look forward. We mentioned in the comments there that the power business was a little softer for us. Part of that relates to the non-repeat of some project business that we saw in Asia Pac last year, which wasn't repeated. So we were involved in some quite large waste to energy projects that, as I say, weren't repeated in 2022. And that helps to explain why power is a little bit softer for us. Perhaps final slide from me before handing back to Gig, but really just to sort of summarise, I guess, from the financial side. We believe that we've got really good momentum. Order intake in the year was good and the final quarter was particularly strong. We enter 2023 with a record order book, and that compares with actually entering 2022 with a record order book as well. So a nice starting position to be in. The supply chain situation, I think we'd describe it as having not gone away as a challenge, but it has stabilised, as was demonstrated in the second half of 2022. Inflation is also still present. That hasn't gone away. We think looking into 2023 that this is more about people costs than it is about materials, and we will be looking to raise prices to offset people costs as we go through the year. I think the important point here, though, is to remember is that Rotork has got good pricing power, as evidenced by the pricing increases we've done in the last couple of years. And given the backlog and the order intake that we've seen, we are anticipating that volumes should also help to cover the inflation that we see, plus also any requirement to invest, for example, in the Growth Plus programme. I'll leave it there and pass it back to you.
Thank you, Andrew. Okay, so what I'd like to do now is to give you an overview of our Growth Plus strategy, so we can move on. Before I do that, I just wanted to remind you or let you know that at the start of November, we held a capital markets event in London. That event was filmed. So for those that were not there or wanted to view the materials and actually the event itself, on our website, you'll be able to see the video or the recording of the Capital Markets Day, as well as the material. And we went into quite a lot of detail in terms of the content as well. So that's just for background information. But the key messages coming from the Capital Markets event is that our Growth Plus strategy is designed to deliver growth, and it focuses on 3 pillars, which I'll go through in a bit more detail on the next slide. The megatrends of automation, electrification, and digitalization are all important factors towards driving growth for Rotork and support the underlying business. Sustainability is a great opportunity for us. A lot of our target segments are built around sustainability, as we see a real need to drive emissions reduction as well as the energy transition itself. And we have our eco-transition portfolio, which we communicate in terms of products sold into those markets. Site services is a key differentiator for us, as I explained in my key reflections. It's a big reason why Rotork is seen as the #1 supplier in terms of electric actuation. So we move on. So this is an overview of our Growth Plus strategy. It builds on the foundations developed and delivered by GAP, and without GAP we wouldn't be able to move forward. But essentially, Growth Plus is designed to deliver on our financial ambitions of mid to high single-digit revenue growth and mid-20s adjusted operating margins over time. The plus element covers areas in addition to growth, so items linked to delivering a sustainable future that benefits all of our stakeholders. So essentially, in terms of Growth Plus, we have our purpose, which is keeping the world flowing for future generation. Our vision is to be the leader in intelligent flow control. And then we have 3 pillars. The first pillar is our target segments. And here we've identified key segments within each of our 3 main divisions where we see significant opportunities for profitable growth. It's where we have the right to play, where we have a good value proposition, and where we can accelerate the business above the base business. The second pillar is our customer value pillar. And we want to put the value we provide to our customers at the forefront of everything we do. So initiatives under this pillar include a go-to-market enhancement, a global supply chain program, and improved customer experience. Then the third pillar is about innovation, innovative products and services. And innovation is the lifeblood of Rotork. Over the last several years, we've brought together our teams and streamlined how we deliver innovations. And now our teams are focused on projects which are aligned to our target segments with the global macro trends of automation, electrification, and digitalization. So if we move on. So this is a slide that was actually taken out of our Capital Markets Day. And this slide highlights the total market size of our target segments for each of our divisions. And we think that the target segments across all of the divisions represents around half of the group revenue. So the other half is the base business. And then we have what we show here is the market growth rate of our target segments within each of the end markets. So what that's showing is that we've got good tailwinds in terms of the market growth, coupled with the value proposition and our right to play in these markets. That's how we're really going to drive growth going forwards. So we move on to the next slide. So just to bring target segments to life, I wanted to give some examples of some of the target segments and early progress. Again, the Capital Markets Day presentation materials and video will go into a lot more detail in terms of Growth Plus, but here are just some examples. So one of our target markets within oil and gas is methane emissions reduction. And if you look at that, the real macro driver for that is the Inflation Reduction Act in North America. So a lot of the upstream oil and gas, North American upstream oil and gas operators, they're really looking to eliminate the amount of methane emissions that come out of the wellheads. So currently what's happening is as they drill for oil, the methane gas in the ground escapes. They use the methane gas to operate pneumatic diaphragm valves. And then given that they are pneumatic diaphragm valves, those diaphragm valves vent the methane to atmosphere, and methane is 28 times more pollutant than the CO2. The best way to eliminate this is to switch from the pneumatically operated diaphragm valves and move to electric valves. So Rotork don't make the diaphragm valves, but we do make the electric valves. So this is seeing a shift in that market move towards electric actuators, hence the mega trend of electrification, driven by the Emissions Reduction Act. And so this is creating an exciting new segment of growth for Rotork, one that we really want to capitalize on. So that's the methane emissions reduction. In terms of within CPI, the example here is carbon capture, usage and storage. So again, as part of the energy transition, one of our target segments within the CPI division is hydrogen and carbon capture. And here's an example of a project that we won in terms of carbon capture called the Northern Lights. So this is the first open source carbon dioxide transport and storage infrastructure in Europe. And it's really going to help towards the decarbonisation of Europe. And in this particular project, Rotork electric actuators have been selected for pipeline shutoff and tank storage emergency shutdown applications. So again, this market lends towards our eco-transition portfolio. And again, it's the drive towards sustainability. And hopefully you can see how our key target segments are not only helping to grow Rotork, but also have a big part to play in terms of sustainability. The last example is in wastewater treatment. And this is an example of, we won a project in Singapore for the PUB water reuse project. And PUB is Singapore's national water agency. So here in Singapore, they were looking to reuse dirty water to turn it into clean water, as there is a shortage of water supply into the country. And again, Rotork actuators were used together with our leverage of Rotork Site Services to win this project, which was around £1.5 million. Right, so if we move forward to the next one. So that was an example in terms of our target segments. Moving on to the customer value segment. So I wanted just to highlight and give you examples of customer value in action. But just as a reminder, customer value for us is important as we want to put the value that we provide to our customers at the forefront of our thinking. To go along with our market-leading products, we want market-leading service as well and delivery. An example of this is a program which we launched last year called Achieving Customer Excellence, or ACE. Now, the ACE program was actually designed where we identified certain high-running products, and we really wanted to reduce the lead times of these high-running products. So in this case, we reduced the lead times of our gears products in 2 European factories from 16 weeks down to 2 weeks, using our lean methodologies and skill sets that we developed under the Growth Acceleration Program now applied to this factory. And so now we're trying to compete against, in a market where we are now delivering products in 2 weeks rather than 16, so ahead of our competition. So hopefully that gives you an example of how the customer service can really help to drive growth. The other example is about customer experience. And in this example, what we're doing is we're re-engineering our business processes so that we can quote faster to the customers. So the first example was about improved lead times. This one is about improved quote times or expedite times to our customers. And we're looking at, again, deploying the lean skills that we've deployed in our factories, but to the front end of the business so that we can streamline our processes so that we can quote faster to our customers. A key enabler of this will be the integration of a new ERP system, which we will launch across all of our entities over the next 3 years. And we've just recently gone live in our Bath facility with our first deployment. So moving on to innovation, which is the lifeblood of Rotork. So for us, innovation will be linked to the key megatrends of electrification, digitalization, and product efficiency. So alongside the innovation in 2022, we had to re-engineer a number of our electronic circuit boards to overcome the supply chain issues and deliver our products. Despite this, we still launched 5 new products onto the market. One of which is our enhanced intelligent asset management service. And this service, actually, what we did is we improved the data source, the connectivity, and the lead times in terms of delivering a health check report to our customers on the products that we have in their install base. This really helps them understand where to prioritize maintenance. And it's not only is it a revenue driver in itself to be able to provide the health check, it's also used by the site services team to really drive lead generation for increased maintenance and refurbishments. So then we move on to the next slide. So I wanted to just highlight here our eco-transition portfolio. This is a slide that we introduced last year, and it's made up of 3 pillars: water, wastewater, methane emissions reduction, and our new energies. So these are the products and services that we deliver into segments to drive clear sustainability benefits. And the percentage of our products representing this portfolio is around 30%. Overall, this portfolio grew 10% year on year, with wastewater and methane emissions, the products into those pillars, growing faster than the 10% and growing faster than Rotork's growth rate overall. However, we had a reduction in the new energies and technologies portfolio as we had a large waste to energy project in China in 2021, which didn't repeat in 2022. So if we turn now to the market outlook, starting with oil and gas. So during 2022, we started to see the return of industry investment in production following several years with spend more focused on upgrade, refurbishment and maintenance. So looking forward, whilst there is some uncertainty, we believe that the investment trend in the oil and gas market will continue, especially with the energy security risks around Europe. So we see the outlook for oil and gas as positive. We also see the lifting of COVID in China also as a positive for us going forward within the oil and gas market. In terms of CPI, well, CPI is clearly seeing the benefits of our target segment strategies, focusing on niche markets where we provide intelligent flow control solutions. So industries here include decarbonisation, as I've mentioned earlier, in terms of hydrogen and carbon capture, which are growing. Other segments which are also positive for us is the chemical, HVAC and mining areas. And then finally, in water and wastewater, we see that water infrastructure investment continues to grow year on year across all of the regions within the world. And then again, the lifting of COVID in China, we see that as a positive towards driving China water and power projects going forward. So if I end with the summary. So to summarize, Rotork is a first-class engineering company, market leader in terms of intelligent actuation, and our purpose, keeping the world flowing for future generation, really serves us well. Our vision is to be the leader in intelligent flow control, and we have a new strategy to deliver on our financial ambitions of mid to high single-digit revenue growth and mid-20s operating margins over time. In 2022, we delivered a strong growth, especially and as expected in the second half. Supply chain disruptions throughout 2022 have decreased. However, we're still not out of the woods yet. We are still seeing supply chain disruptions. However, the frequency of those disruptions are less. And then going forwards, we had a good Q4 order intake. We enter 2023 with a record opening order book. We're seeing good early signs of the Growth Plus strategy delivering growth. And whilst mindful of the uncertain economic outlook, we expect a year of further growth, progress in 2023. And that summarizes our presentation. I think we'll open the floor to questions.
Thank you very much, Gig and Andrew, for that presentation, and congratulations on the strong performance and also your record order book, which obviously positions you well for 2023. We are now going to take questions, and just as a reminder, there's a Q&A box at either the bottom or the top of your screen. Please type any questions that you have into there, and we'll try and address as many questions as we can in the time that we have available. So just starting with the first question, can you talk about why the adjusted operating margins fell, and whether that is likely to improve in 2023, and what are the medium-term aspirations for operating margins?
Okay. Yeah, I mean, I think overall the adjusted operating margins fell a slight 20 basis points is due to the high inflation in 2022 from our raw materials or material content. So in 2022, we saw significant increases in chipset costs. So chips that were costing £1.50 increased to £40, then increased to 50, and then in some cases ended up near £100. And we have 2 or 3 of these chips in every single actuator. So because of those increases in the chipsets as well as the raw materials, we put through 2 pricing increases in 2022, one in January and one in May. Those pricing increases covered the absolute pound note inflation for those chips. However, therefore, as you then turn that into a percentage, the percentage slightly reduced. I hope that makes sense.
I think maybe just to add, I think it is useful to look at the first half versus the second half, just in the sense that the supply chain challenges that we faced, they were quite acute in the first half, and the price increases, the material cost increases that Gig was mentioning, that was really starting to sort of take hold in the first half. If you actually look at the second half by comparison, where we started to see improvements in the supply chain and where our price increases started to come through, you actually see a real marked improvement in the margin in the second half. Over the full year, whilst the improvement in the second half was really, really encouraging, it wasn't sufficient to offset the margin decline in the first half. So it's important in this instance, I think, just to have a little bit of a look at the first half, second half, and just see how things improve through the year. Yeah, I think we feel pretty confident that we think the margin was actually quite resilient given the circumstances that we experienced in 2022.
Absolutely, absolutely. Then in terms of looking forwards, I mean, you can see on this screen here, our ambition is to achieve our mid-20s operating margin. So our aim is to show year-on-year margin progression. So we do expect to see margin progression in 2023. We haven't put a time frame in terms of when we will achieve the mid-20s. However, we have stated that we will show year-on-year margin progression. We will balance the margin progression though with investment. So as we grow, what I want to be able to do is take and reinvest back into the business so that we can drive a long-term sustainable growth model. So we are looking to reinvest back into the business. However, we will be showing year-on-year margin progression.
Okay, thank you. Question here, is the 8.4% revenue growth in 2022 before adjusting for inflation, and what would it be after inflation? So I think the question is asking, maybe can you split out basically price and volume from that 8.4%?
Yeah, so what we've said is here, roughly it's 2/3 pricing, 1/3 volume. So hopefully that answers that one. And then again, that goes back to kind of the first question, that on the drop through, therefore, is on the volume rather than the pricing.
Yeah. Great, thank you. So a linked question to this, you had a resumption of organic sales growth in the second half of 22, and your outlook statements are quite positive and suggest the backdrop for your markets are positive. However, there is talk about the global economy going into recession. So do you think you can still grow sales in the face of a global recession, or are your indicators suggesting we're not going into a recession?
I think, yeah, obviously no one can determine for sure. There is economic uncertainty. However, from what we see, we're saying actually we think our end markets are positive. We are still seeing CapEx spends in the oil and gas markets, which will result in growth for Rotork in the oil and gas markets. We are still seeing investment into water infrastructure across all of the regions. Again, that's a positive. China coming out of COVID, we don't quite know exactly how that will transpire in the short term, but definitely in the medium and long term, that's a positive for us in terms of the China growth. And then in CPI, we've picked a number of niche markets where we think, there is still good growth within those markets. So we are positive in terms of what we're seeing, notwithstanding some of the uncertainty.
And possibly worth just adding the Inflation Reduction Act in the States, because that's been something we've been talking about for a while, but has been getting more focus in, for example, the newspapers and things, hasn't it, in recent days? And what's interesting about that is the Inflation Reduction Act is actually very helpful for numbers of our customers. So whether it be to do with carbon, decarbonisation, so hydrogen, carbon capture, and a lot of which will be actuator intensive oil and gas customers. But at the same time, you've also got quite a bit of that money is actually targeting things like water quality and improving water networks and things like that. So there is some structural sort of government driven sort of tailwinds as well. But I think everybody at Rotork is mindful of the economy and keeping an eye on these kind of things. But as we start the year, we feel, I guess, cautiously optimistic.
Thank you. A linked question to the US IRA. Think about your eco-transition products and the US IRA. Do you have the right facilities in the US to benefit?
Yes. So we, good question. Yeah, we actually have quite a lot of what we call local for local manufacture, so region for region. So a lot of what goes into America is produced in America. It doesn't come from Europe or Asia Pacific. So we have we have 3 facilities in America producing the range of products. And actually, one of the target segments, which is methane reduction, the key core product is coming out of the 2 American sites. And we actually have initiatives to reduce lead times as much as possible on those products so that we can service that market as quickly as possible. So absolutely we do, and it is in region.
Okay.
And perhaps to add, while we talked about the footprint simplification that we did, taking the number of facilities down from 31 to 16, the important thing to recognise there is we haven't really taken out the capacity as such. So in the case of the facilities in North America, they're currently running single shift. So we could increase output just by continuing with the lean and productivity kind of things that we've been doing. But were we to see the kind of growth that you're suggesting, we could actually look to take that up from single shift to shift and a half, or possibly up to 2 shifts, and we'd be able to increase output that way. So if we were to see good growth, which obviously we're hoping for, we wouldn't need to increase investment to be able to deliver it.
Okay, thank you. Got quite a specific question here. What happens to the methane that is captured?
It's transported and used and stored in a different way, and there can be multiple ways. In some cases, it is actually used to produce LNG.
Okay. Next question here. Were you able to recover all the inflationary cost increases through price rises?
Yes, from a pound note point of view. So in our results presentation, we haven't presented it today, but in our results presentation, on slide 8, there is an adjusted operating bridge, which shows a net price mix of positive 3 million. So absolutely, we have. But you can have a look at that operating bridge, which shows that on our results presentation.
Wonderful, thank you. Can you talk about your plans for acquisitions, especially, I guess, size? Now, I guess asking maybe what capacity you have to make acquisitions and how large could you go?
Yeah, so can't talk too much about specific acquisitions, but we are looking always constantly at potential acquisitions. So our pipeline of acquisitions now revolves around our target segments. So what we want to do is make sure that those acquisitions can really accelerate growth in our chosen markets, and therefore they could be new innovations or new products that we don't have to really accelerate into a market. It could be companies with already market share, which will take, or it actually could be companies with attractive adjacent markets that we can't enter now, but we would want to enter. So that's really the pipeline. Also, if you look at our vision to be the leader in intelligent flow control, we want to have companies that provide that intelligence. So as much input into a customer's DCS or things like that. So we're looking at companies to provide kind of sensing technologies and things like that. I have also taken size constraints off the table. So in the past, we have looked at larger, bigger deals. Now we're looking at smaller bolt-ons as well as the large deals. So we're not taking the smaller deals off the table. So that's the landscape of our M&A. In terms of ability, we obviously have the internal resources available to do that, but we've also got a balance sheet to be able to do that as well.
Thank you. Can you update on the supply chain situation? Was it still a challenge in H2 2022? And what is the outlook for 2023?
Yeah, so the supply chain situation improved as we went through H2, hence our higher delivery. It improved for two reasons. The number of issues that we were experiencing reduced. So the frequency of the issues reduced, but also all of the mitigation actions we put into place, things like buying the chips direct now, re-engineering the circuit boards, putting in dedicated supply routes for our business. All of those things have really helped us to overcome the issues. So going into 2023, we're not out of the woods yet. We are still seeing supply chain issues. However, the frequency has reduced, and also our ability to cope with those issues has also increased. So that's where we stand at the moment.
Okay, thank you. Question here asking, will this presentation be available on your website?
This one specifically, probably not. Our results presentation absolutely is, but I also guess that this recording is also available on your website.
That's right. Yeah, it will be available afterwards. You mentioned increased investments in the business going forwards. What are you investing in and what are the implications for margins?
Yeah, so I said at the Capital Markets Day that actually to enter our target segments, we didn't need any new products or building of a big infrastructure like a plant, and that's still true. However, as we grow and as we become more successful, what we want to do is add capability into the company. So the investment is more in the form of resources and headcount. And that will be in the areas of commercial, so sales. So for example, if as hydrogen takes off or carbon capture takes off, we may need to expand our sales network and coverage across the globe. We will do that. We will also increase our capability for engineering. So as we move towards digitalization and connected products, that is something I don't want to outsource because that becomes the IP of the company. So we want to be able to expand our capability and resources to be able to deliver new products in there. And then the third will be around the re-engineering of the business systems. So that will be investment in terms of business processes and structure, and then the ERP rollout. So they're the key areas of investment. But as I said earlier, we're going to balance investment with growth so that we will show margin progressions year on year.
Great, thank you. And just as a reminder, we've got time for a couple more questions. If you do want to ask a question, please type it into the Q&A box, either at the top or the bottom of your screen. Got a question here looking at China. What percentage of your sales in 2022 were in China?
I think rough approximate numbers, I think you can see in the result.
It's one of the slides that we just showed, actually, the group revenue slide that I talked to shows that APAC by destination is £246 million. I think it's a rough number to have in mind would be that China is around half of that. So if you had it in mind as being perhaps 120, possibly 130, I think that would be broadly the right kind of number. That's by end destination. I think off the top of my head, we export a little bit to China, but we are, as Gig was saying, we are largely local for local.
Yeah.
Hope that helps.
Yeah, the majority of what we sell into China is made in China.
Okay, and the question is still on China. Are you reliant on supply of chips from China?
Not China, but Taiwan. So we buy a lot of our chips from Taiwan. So we don't buy any chips from China.
Okay, thank you. And we've got the last question here. Who are your competitors in North America?
So in North America, they are the kind of our traditional competitors. So Emerson with their brands Betis and Biffy. We have Flowserve also, and then we have Alma. Alma are more in the water market and not so much in the oil and gas markets. Those are our big three competitors.
And probably worth adding, in the case of Flowserve and Emerson, they're also important customers for us as well.
Yeah.
So the industry is one of those slightly unusual ones where people compete and also work very closely with as well. So we're very familiar with both of those businesses.
Yeah, our strategy is to be valve agnostic. So we will supply any valve company as we are an actuation company, whereas Emerson and Flowserve both own valve companies. So actually, in some cases, they are competitors to their customers, which does create barriers in some cases, which we don't have such barriers because we do not own any valve companies.
Thank you. We've had a couple more questions in, and I think we've got time to take them, so I'm going to ask them here. Do you have any problems recruiting engineers?
We do, actually. I mean, there is a shortage of engineers in the world, more specifically software engineers. So that's why I think having a good employee value proposition is absolutely key. But I don't think our difficulties are just Rotork. I think, you know, when I look across all of our peers, engineering seems to be a function where there is a lack of resources in general.
Okay, thank you. And now the last question. What steps do you take to ensure that key customers are retained in the business, and how closely do you work with them in developing products to service them?
So that's a really good question. That whole second pillar is about customer value, and we absolutely work closely with our customers. We have a route to market that is quite complex. So our customers, we actually have 3 customers for the same project. We have the end user, who we spend a lot of time with getting our products specified. We don't actually sell to that end user, but they really like us because we have our service program. So then we have the EPCs, which are the companies that design the infrastructure. Then we have the valve OEMs. So the valve OEMs are our point of sale, but actually a lot of our sales is done at the end user, and we have to stay really close to them because that's actually the whole success of Rotork, becoming specified, becoming on their approved vendor list. They love it that we have a service network that they can call upon. So that's something that is I would call bread and butter of Rotork, something that we have to be very good at, and which we are very good at.
Brilliant. Thank you. Thank you, Gig. Thank you, Andrew. That brings us to the end of today's webinar with Rotork. I just wanted to point out, as you're leaving today, you'll be asked to complete a feedback form. It'd be really appreciated if you could just complete that as you leave. And just to flag up, we've got a few future webinars coming up over the coming couple of months. They're there on screen, and if you want to register for any of those, they're available on the Yellowstone website. So thank you again for attending, and we hope to see you all soon.
Thank you.
Thank you.